Hello again, everybody, and welcome back. I really appreciate you taking the time to join me today. Today, we are going to talk about something that has been a popular topic in the Discord, which is the reversal indicator. Who doesn't love finding a good reversal? What we're trying to do here is to not catch the tops and the bottoms, but to see when there are large general trends that we could take advantage of and see when there are trends where we're about to have range breakouts that we can take advantage of. And once you learn to spot these, I think you're going to be impressed. So let's get into it. All right, everybody, let's go ahead and jump into the chart. I'm excited to show you the reversal indicator. You'll notice that there are three things going on here in each of the panes. Up at the top, we have some triangle arrows. We have some vertical and horizontal lines. We'll get into that in a minute. In the middle, we have the universal momentum oscillator, which is a play on the MACD, but with volatility factored in a couple of different ways. And then at the bottom is the actual reversal indicator itself. The indicator is based off the concept of the mass index. And what the mass index does is it looks back over a period of time and it measures the highs and lows, and it tries to show whether a range is expanding or contracting. There's no directional bias, and so as a result, you'll see that we'll have to find another way to try to figure out what is going on. What it really is going to try to do is show us that, if you think about it, if you have a range of highs and lows and we're going in one direction where it's just getting higher and higher or it's just getting lower and lower, it's going to get stretched, and after a period of stretching, we tend to snap back. There's a reversal. The opposite can happen where we don't really go anywhere for a while. It has, in a sense, consolidation, and after a period of consolidation, we tend to have these breakouts, and we see some volatility come back in. And so one of the ways to try to figure out where that directional bias is coming from is to look at where the momentum and trend is at the time, and that is where the concept of the MACD comes in. When we're looking at a range breakout, we want to know about volatility, and that is where the measuring volatility comes in, and that's where this universal momentum oscillator in the middle, having both of those added into the equation, can give us an idea on hopefully how to read those. Now, it would also be nice if we knew maybe how far things are going to go, and that is where these vertical and horizontal lines are, which we'll get into in just a minute. So you can think of the reversal indicator as sort of like a weather indicator. It's going to tell you that something's going to change. It's just not going to tell you whether it's going to change to a sunny or rainy day. But I think that'll make some sense in a minute. You'll also notice that it's got some different colors going on. Let's get into the colors really quick. The actual indicator itself is this blue line here, and we've got a good old Bollinger Band around the blue line. And that's going to help us hopefully identify when some things are moving too fast, too slow, about to change, etc. So we're looking for an indicator using the Bollinger Band if we can. And then you'll notice that we've got these yellow and purplish pink boxes. So what that was meant to do was that's trying to draw your attention to the fact that one of these periods of expansion or contraction is happening. But I purposely stayed away from using the colors green and red because there's no directional bias, and so many charts use red and green to signal up and down that I thought if I colored it red and green, our brains would just sort of instinctively assign a directional bias when you see the color, and I didn't want that to happen. So it's just meant to call your attention to what's going on, but it's not meant to say this is the direction that things are going to happen. The other thing that I haven't really figured out over the years is that I haven't seen a direct correlation. Sometimes it works, sometimes it doesn't, between the height and the length of these periods. So you'll notice like over here to the right, We've got a much wider yellow range here. And over here to the left, we've got some narrow ones. I don't really think that that is an indicator, or if the blue line goes far up above this dashed red line, I don't really think that's an indication of what's to come in terms of the magnitude of the move. I just think that it's an important thing. So let's go ahead and we'll start off here with SPY. We'll rewind the chart to just about 2 years ago, and I'll show you kind of how this played out. So we'll go back here, let's see here, roughly August of 2 years ago. Let's move this into the middle, zoom in a little bit, and hopefully this will play out at the right speed that we can show stuff. You may remember the fun bear market of 2022, and we had kind of been steadily going down. People were kind of wondering, where is it going to end? Bulls got a little bit of a break here. We started heading up, and then we're about to see that we hit another downtrend, and everybody was wondering, was it going to continue? So let's find out. So a couple of things happened. First, you may have noticed that this red line, horizontal line, had appeared, and what that is doing is that is another methodology that isn't involved with the reversal indicator at the bottom. Is going to try to give us an idea of where we might be going. And so when this opened up on this red candle, it's going to say that, hey, we're gonna come back to that, and in just a short order we did by the next one. So that was quick, but it was a price retracement that already happened. All right, so now we see that we have got this yellow box formed. The blue line went above the red line. What's going on? We've got this green triangle. Shouldn't that mean that there's a reversal to the upside? So this is where the little bit of nuance comes in. So what was the overall trend that was going on at the time heading into this? And you can see, for the most part, nothing goes straight up or straight down, but we were trending down. And even here at the last minute, we started to kind of see this bottom forming, and we got this curl. And you're going to say, well, hey, wait a minute. It looks like right after we got that warning that we continued to go down. And that's where this is just not going to try to catch the exact bottom, the exact top. This is calling your attention to the fact that something's about to change, and we want to be mindful of that. Using the universal momentum oscillator, you can kind of see how we had gotten close to the overstretched range. Now we're coming back into the, overstretched is not it, like overbought, oversold. We're getting close to the oversold here. So here we go. And for the most part here, we did start moving up. And you can see that we even got a new green line here that was going to become, after we dropped back down here, a target to move back to the upside, and here we did. So now we changed the general direction of several days heading down to now several days heading up. General direction change, yes. Now this purple box just showed up. So this is the first one here. So that is telling us that there is a range contraction here. And so what we're kind of doing here is, whenever this general area, we are looking to see if we are moving inside of this range. This is a warning that there's volatility coming. Still don't have a directional bias, but we know that it's there. Previously, we had said that if the momentum was kind of trending in a certain direction, that the reversal indicator, or the yellow box, was going to tell us that we want to do the opposite. So we tend to be going down. Now we're going up. Would this mean that we've been going up? Are we going to go down? No. A lot of times it can be a continuation of the trend. It just means that, we hit the slow spot here and then we accelerate again. Sometimes it's a reversal to the downside. More often than not, it's a continuation of the trend. But I would just caution you that when these purple boxes show up, that using this momentum oscillator is not going to yield the same results as doing it when the yellow boxes show up. So let's see what happens. Well, let's see. there was definitely a bit of a sharp change, right? So we traded kind of inside a narrow range, big candle up, down, up, and down. So the continuation didn't happen. Great example of why you shouldn't do that. And then, you can see that was a lot more volatility. So let's keep watching. All right, so if we kind of go back here and say, generally speaking, we were trading inside of a range, probably starting somewhere roughly in here. Ooh, what's going to happen? What's going to happen? Yeah, we start getting some moves out of that range, I'd say. We had a new down target retrend. We got an indicator here that we were going down, and sure looks like we were going down. Another one here. Here's where the up happened right away. This one's not a big range in terms of the number of days, but we can, you can kind of see here what my point is about these range breakouts. We were trading kind of inside of a narrow range, and then we take off. That time that was a continuation. So we had this down, and then we came back. Now we're building another reversal here. This is May of 2024. So here's a good example of why I don't think that the magnitude of the changes matters. If you can see here, we had a general uptrend going for a couple of days. We had 2 red candles after a couple of green candles, and there wasn't much of a reversal to speak of there. I guess you can kind of count this. I mean, we still finished at a price that was higher than that, but we went from you have to look at it this way. We went from an overall trend up to a trend that was down, and that's a warning that something's coming. I want to caution you that these things don't happen right away all the time. Sometimes it can take a couple of candles, especially when you're looking at the lower time frames. It could take a couple of minutes. Oftentimes, if you're looking at the 5-minute time frame, which I like when I'm looking at my daily charts or my intraday charts, and it can take 15 minutes before some of these reversals show up, which is great because you want the heads up, but it also means that you have to sit on your hands for a few minutes and figure out what's going on. Here was on July 30th. We started to get some of that bad economic news. We had the yen carry trade crap. This told me that this was going to be a price target when we reversed, and then sure enough, here by the 14th, we did. And I think we are back here too. We just finished a long range expansion. Everybody has been talking about, what a change of pace after we had those big drops. It was one of the fastest recoveries up, quick vol crush, etc. Now we've got this. Is it going to turn out to be a situation where we get a reversal like this? Maybe we have a couple of red days, maybe we have a small kind of pullback, or is it going to be, a big trend reversal, along the lines of what we saw here? Don't really know for sure. Again, I don't think the height and the length of the reversal really matters, or the fact that it was such a steep increase, therefore we got to give it all back. I would think if there's a target here, that this would be support at this point, but it's kind of hard to say. So maybe 542.60-ish is that. Let's go ahead and jump into a lower time frame here just so you can kind of take a look. You're going to see that you're going to have much more frequent occurrences when we take a look at this. And so we'll just go ahead and maybe peel back here just a couple of bars. I think you got the point, so I'm not going to spend a ton of time going across this here, but obviously we got a reversal building, we got to pay attention, and we got an upside reversal, and sure enough, after a bit of downtrend, we got a reversal back up, hit that retracement target, another reversal building. You can see that this one was higher than the last one. Is that going to be any higher? Not really. We have a new retracement target, and here it is. Let's see what happens. We hit it, and then you'll notice after we hit it that we've got this area telling us that volatility is too low. The range expansion is too low. You can see we really didn't move there for a couple of candles. We're going to get some new volatility coming, and boom, there's all that new volatility. New target to hit to the downside. We've got a downside reversal, followed by another reversal forming very quickly. Sometimes that's going to happen where maybe for a bar or two on these lower time frames, you're going to see a gap like that. It's going to be harder to play this. I would play the second one. Just because this is, for all intents and purposes, a continuation. And here we get this upside one, and it doesn't look like there was much to speak of. We got back a little bit there, so the magnitude of that was not a lot, but we did hit all of those retracement targets. New retracement target here, new yellow caution sign popping up, or alert sign I should say, not caution. Which way is it going to be? It was to the downside. Now, when you look at this, you say, well, hey, wait a minute, we had a couple of candles here. Why would this be a reversal to the downside? Well, the general trend, even though it was violent, was to the upside previous to that, going back here. Some volatility coming up. This is a long one, so we're trading without moving much. And there we got a little bit of a pop up here coming out of there. Got a reversal to the upside, some new targets on the downside. Hit one of them, hit the other one, and that's where we're at. All right, so hopefully you have gotten an idea of what the reversal indicator is. Remember that it is not trying to catch the exact bottoms or the exact tops. It is there to show you general trend reversals. I would not trade on this quite like you would a pivot point, where you want to take sharp action at exactly the candle that these signals are given. That's why I think it makes more sense to use these reversals on higher time frames. They tend to give you more time to catch a trend change. They work really great to catch volatility. Let me see if there's maybe like another good example here, but we've got this narrow range that we were trading, and then sure enough, once we break out of that range, we usually get a decent move. This one here wasn't much of one, but we did get a sharp drop after it kind of came out of that range. So that's what I hope you'll use it for. And remember that none of these indicators are perfect, and they're not a system that's designed to be right all of the time. It takes a little bit of intuition and a little bit of luck, and I wish you the best. All right, everybody, that's going to do it for today. I really hope you enjoyed learning all about our reversal indicators, and I hope that you don't get turned around trying to find them. And I really appreciate your time. Thank you, and as always, best of luck.